Thank you for tuning into another edition of the Vulcan Report. This end of day report is for trading on Thursday, February the 8th, 2018. We'll make this real quick. Tomorrow is Take Back Friday. Do not be surprised if you see a monster key reversal rally in just about everything. All right. Now, it's also possible that you can see a continuation sell off. But for right now, it looks like we're going to have a Take Back Friday where we could see a monster rally. Looking at the first chart, you got the weekly chart of the Bitcoin futures. And as you can see here, the market got as low as 5,880 from falling from 20,500 at its right around its inception. All right, so what does the market need to do to put in a bottom? It needs to close tomorrow above 10,393. That's what the market needs to do on the future side. Failure to do so will open up the door wide to take out this week's lows in the coming week. Looking at the Dow futures. All right, what does the Dow need to do? The Dow will need to close tomorrow above 25,258 to put in a bottom. Chances are that's not going to happen. There's a possibility that we could have a nice bull run, but taking out 25,258 is pretty much slim to none. But you never know. Anything can happen. Looks like we're going to have more downside, and the market could possibly test the trend line support here, which is setting at 22,597. All right. So another whopper of a drop possibly coming, and then we should bounce from there. Remember, you got this rampage up here, and prices could, touch or graze the bottom here, which is around 21,551. Okay, and then bounce. You should have a nice rally up from here after the correction is done. All right, let's see. Take a look at the NASDAQ 100 futures. All right, pretty much the same thing. It needs to close tomorrow above 6,703 to put a bottom in and say that this is it. Or we're going to have more downside. And the trend line support here is at 5,980 and a quarter. So let's see what happens. Failure to do this tomorrow, likewise, would open up the door for further downside to come. Okay, that's pretty much it. Let's take a look at gold. All right, gold needs to close above 1,329.90 tomorrow, or it's probably going to pull back and test the 1305 support in the coming week. Looking at silver. Silver right now is in free fall status. In order to reverse and start to turn a little bit bullish, needs to close above $16.87 tomorrow. Failure to do so will cause the market to lock in on this downside and accelerate down into the $15 handle in the coming week. All right, let's see, moving right along. Look at the bonds. Bonds need to close tomorrow above 148.01 on the futures, or we open up the door to take out the 143.20, which we'll probably take out in the overnight anyway. This is in free fall. So it looks like this one's going into the 130s. We'll see what happens. Looking at crude oil futures. All right, this one needs to close above $63.22 tomorrow, or it's going to open up the door to get into the $50 handle. Next support is at 58.94, and below that is at 53.80. Very high alert that we're going to go down to the 53.80. Let's see what the market has in store. Looking at your GDXJ. All right, this market would need to close tomorrow about $33.28, or you're going to open the door wide open to hit 30 possibly next week, and maybe even back into the 20s. Okay, let's see what else. Let's look at NVIDIA. All right. Okay, NVIDIA needs to close above $224.46 in order to put it into the downside. If not, it opens the door next week to test the lower end of the 200 range, which is 206.85. Next support is not until 168.70. So let's see if this market will stabilize or not. All right, here's Facebook. Facebook is in free fall, and right now 163.62 support is in play. If it doesn't hit it tomorrow, then at some point in the coming week, market should test that before finding a bottom. All right, looking at Apple. Apple is already at the trend line support of 154.84. I don't know if we're going to see too much more on the downside on this one. You do have the bottom of the Kumo cloud coming into play, which is around 149-ish. All right. And then as you can see, we got rampage coming. So we'll see where it stabilizes, but it could get down into the 149-ish level. We shall see. Looking at Amazon. Amazon will need to close tomorrow at 1,351.81. Got to close above that, or it opens the door to test trendline support at 1213.24. So you're looking at a massive possible correction in the Amazon. I will put it right here, folks. Let's see if it can stabilize. Looking like it wants to stabilize, though. It is looking like that. So I think we'll see that bounce. All right, let's see Netflix. All right, Netflix is looking all right. As long as it stays above $245.55, it opens up the possibility to rally back up towards the highs of 286.81 in the coming week. This one is looking the strongest out of the FANG. Alphabet, Google. Free fall status, $967.55 is in play for tomorrow into the coming week. This one's not ready to stabilize yet, but if a miracle happens and it were to reverse, as long as it closes above $1,101.74 tomorrow, then we would call the bottom. But this is not the bottom. This one looks like it has further to go. All right. I think that's about it. Don't have too much more to see except for tomorrow's Take Back Friday. Let's see what the markets have in store. I tell you this, though, very interesting that the cash Dow today closed down below 1,000 points, but the futures only closed down 700 points. So that is a powerful sign that futures is finally ahead of the cash market. Another notable is that if you take a look at UVXY, UVXY did something interesting. Right after the close, all right, it shot down $3 after the close. All right, it closed at $27.91, and as we speak, in the after hours markets is trading at $25.58. All right, so you had a whopper of a drop right after the close in the UVXY. This could be a sign of people positioning, moving ahead of tomorrow's action and getting a jump on it, and getting out of shorts, liquidating shorts, taking profit, and getting ready to ride the rally tomorrow. Possible rally. SVXY. If you take a look, it dropped down precipitously today. All right, and it's just been, just flat, but it eased down a little bit more. You have this whopper of a gap that needs to be filled. All right, and right now that initial line is at $40.16. So the market needs to at least get back up to $40.16, and maybe even as high as $70 to attempt to close that gap. Now, if the market's going to fall back down after that, so be it. But that gap does need to be contended with, and right now the momentum line is at $40.16. So this would be a whopper of a rally, just like we had a whopper of a crash. All right, this was a crash. This was not a profit taking. This is a straight up collapse in this particular ETF. All right, now if the Dow and S&P and Nasdaq did this, then we would say, okay, yeah, that constitutes a crash. But what you have been seeing is not a crash, folks. There is no crash. There is no collapse. Just like the documentary I did a few years ago, there is no collapse. This is a daily chart. There is no collapse. There's no collapse. This is a correction. There is no collapse. I just showed you what a collapse looks like on that SVXY and on the XIV. Those were collapses. This is not a collapse. This is a correction. This is a very organized correction. You don't see any gappage. The market didn't just, gap down. There's no gappage. All right. There's no gap on this daily chart. Not one. All right. This is an orderly profit-taking event. All right. And you see how prices, spiked below the Kumo cloud, and then they brought it back up, and now you just dance around the cloud. It's probably going to get back up here sometime next week, and, got nice rampage up here. But if you want to see the true picture, you pull up the weekly chart, and you can see things more clearly. All right, this is not a crash. This is a correction. Crashes have gaps and parabolic bars. All right, this is parabolic, but it's not a crash. There's no gaps in it. All right, so just wanted to point that out. There's no crash here, folks. The trend is still bullish. If it was a crash, this trend would have already been bearish. All right, I've shown previous charts before in other video series that I did, going back years, showing you the crashes like 2008 and 9/11 and stuff like that. Those were crashes. Those were that was panic selling. This is not panic selling. This is organized selling, folks. If this was really panic selling, this chart would have grave technical damage on it, and it would be in a bearish position, and I wouldn't be able to call it no other way. The weekly chart will be looking exactly like the daily chart, but worse. All right, that's what you would have, and instead you don't have that. You don't have that. If this was a weekly chart, I would be saying, guys, not only have we topped out and hit a short-term top, but the market is straight up bearish now. You're officially bearish. Even though the momentum crossings are happening on the top side of the Kumo cloud, prices would be below the Kumo cloud, and the trend lines, momentum lines will be following the price action on the way down below the Kumo cloud. All this will be below the Kumo cloud if we were having a real panic selling or a crash. All right, so that's not what's happening. This is just an orderly retracement, folks. It may look like a crash because of the breadth of the price points, but it's not a crash. Understand that the market has ran up so much, but it didn't do it fast. This was not a fast run up. This run up has taken years. We've been years in a bull market. People are just now waking up to the fact that we've been in the bull market for years. Look at this. All right. It's not just all of a sudden, the market has run up too far, too fast. We had to correct. No. Bull market, folks. It's been bullish, all right, for a long time. All right, this is 2015, folks. We've been bullish. All right, even before that, going all the way back to 2012. All right, So we've been bullish for years, 6 years of bullishness, and we're just now starting to see some correction. The corrections look a lot, more devastating the higher a price is. All right. Even when bubbles pop, usually it's massive. This is not massive. All right. You're still above 20,000 Dow. Please keep everything into perspective. The first line of demarcation was Dow 10,000. That was a really big deal going back in the day. And then when it took a while to hit Dow 12,000. When the Dow 12,000 hit, it was just oh my goodness, this is incredible. Oh my goodness, wow. Okay, now you're at almost Dow 30,000. I mean, come on, folks. This thing has tens of thousands of points that it can correct and still be bullish. I've proven that. I've showed you charts. In the documentary series I did that there is no collapse, I showed you where the Dow could collapse 10 to 12,000 points and still be bullish. There is no collapse. There is no crash. This is just profit taking in a corrective market. Can it turn into a bear market? Of course it can. Anything is possible, but just trade what you see. Stand aside, get out the way, and let this thing correct, and then get ready to buy it. All right, yeah, you could have came in here and let's say you could have bought the QID. This is the inverse ETF for the NASDAQ 100. Okay, you could have came in here and did something. It got down to $11.11, and now it's at $13.60. It's not a real huge move in comparison, but hey, you could have made a point or two on the long side. Here's something else you could have did. All right, TBT. Inverse ETF for the bonds. Bonds are in the bear market now. So this is not even bull market yet. This is trying to become one. This is the beginning of trying to become one. If this becomes a bull market, it is on, folks. All right, it is on. The bonds are really going to fall. The bonds have a long way it could drop, folks, and this is just the beginning. So keep your eye on the TBT. And the UVXY. All right. I gotta pull up a daily because it's not going to show up on the weekly because of the way it looks. But here you go. This one's trying to become bullish too on the daily chart. We ain't there yet, but it's trying to get close. Okay. If this gets on and popping, it could mean something that we got further to correct in the stock market. All right. But you can see this thing has been in a bear market for years too. Look at that. Below the Kumo cloud, like mud. It's fallen from $98.24, which was done around the week of February the 8th of 2017. All right. So all things being equal, a year later, and it's $27.91. All right. So we have a long way to go. So this is one to watch too. I'm watching this one in a big way. I want to see what happens. All right. That's all I got time for. So wait and see. You want to know where all the money's going and who's pulling out of the market? It ain't the elites. It's not even the big hedge funds. A lot of them are still holding long equity positions. The person who is making all the money is the Federal Reserve, unwinding their balance sheet. All right, which means they're selling their holdings. They're selling stocks. Okay, they're getting the heck out of the market. All right, that's what it means. They're unwinding their position. That's why you're getting all this volatility. And that's why you see it being done so orderly. Computer networks are doing it in an orderly fashion. All right, so that the market won't unravel. The market can sustain, these types of moves because there's so much liquidity already pumped into it going back multiple years. You have trillions and trillions of dollars in this market, tens of trillions to be exact. So just wanted to point that out there to y'all. All right, with that being said, that's all I got for now. Just remember, pulsewavetrading.com. You can come and learn how to see through all the noise and navigate these things and learn how to read the algorithms as well. Put the power of artificial intelligence on your side. postwavetrading.com, and we got a 7-day trial still going on, so take advantage of that. Take advantage of the free training study course and all that good stuff that comes with it, along with live coaching with yours truly. That's postwavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back, and beware of Take Back Friday. Peace.